Hey everybody, it's Joe Troppel with the Troppel team here with John Zerberg with AmeriFirst Financial. Today we are talking about the buying process and when you should start that process. So if you are 3 to 6 months out from buying a house, you need to start that process now, and here's why. Why would you want to start that process right now?
So Joe, the biggest thing that I try to talk to my clients about is understanding their numbers. So knowing your numbers in a sense of what type of loan program you're going to do, what is a down payment, what does a monthly payment look like. Also, it gives you an idea of where your credit score is and if there's things that we could do to improve the score. That's something that can take a couple of months, and it may not be as difficult as you think, but it's also really important to find out. And I think people are afraid of the unknown, so that kind of creates a little anxiety, and maybe that's the hurdle that they kind of need to just move past, because you're going to feel a lot better once you get pre-qualified.
Well, and I think a lot of people, the hesitation is they don't want to hurt their credit. So they don't want to get into that process too soon, because they think that once you pull credit, that's going to drop their score. Is that true?
So no, the credit system isn't designed to hurt your drop your score every time a lender pulls your credit. For a mortgage loan, the credit report's good for 90 days. So we don't necessarily have to do anything for 90 days. And the system's just designed where if you've had multiple lenders pull your credit several months in a row and you don't obtain that like a mortgage in a sense, your score may drop. But just having a lender pull your credit once or twice even to compare, it's not going to drop your score.
Right. So you could find things on your credit that you didn't know were there, and they could take a month to 3 months to repair, and that could affect you. That could cost you thousands of dollars if you don't know that up front. So, meaning you could get a higher rate because you have a lower score, and that will cost you maybe even tens of thousands of dollars over the life of the loan.
Yeah.
So you're going to want to do that beforehand. I've had people that didn't want to get pre-qualified before went out and actually found the house. That's a huge mistake, especially in a market like we are in right now. If you wait until you find the house in a hot market, by the time you actually get pre-qualified for a loan, that house will be gone, most likely. So you want to have your pre-qual ready to go before you start looking. Once you're pre-qualified, we'll know the loan amount, what your closing costs are, how much down payment you'll need, and sometimes that can take months to save up. So you want to know what your costs are going to be before you go out looking for a house. Once we figured out what your loan amount is, then I can set you up on a search, how many bedrooms, square footage, you name any feature of a house, and we can kind of narrow that down on the MLS so we can find you pretty much the perfect house, maybe even the first time we go out. So once we find you the house, we write an offer, and if that offer gets accepted, then we open escrow with a title company. Once we've opened escrow, in Arizona you get a free 10-day look period, meaning if for any reason in the next 10 days you want to cancel on the house, you can and get your earnest money back. So you're at zero risk whatsoever for the first 10 days. You're going to have an inspector go out there, look at the property, look at the roof, look at the air conditioner, all the appliances, the plumbing, electrical, everything about the house. We're going to figure out what's wrong with it, and then we're going to write a list on a document called the Benzer. So the Benzer is where we ask the seller to make repairs. The seller will then respond with what they are going to repair, what they're not going to repair. If they respond with anything but we will repair everything you ask for, you still have a decision whether you want to move forward with that house or not. So once we've negotiated the Benzers, typically we'll either get repairs done or we will get a credit towards your closing costs or a lower purchase price. So once we've negotiated that, then we go to the appraisal. A lot of people mistake the appraisal for the inspection, and they're two different things. Tell them what the appraisal is.
So the appraisal is done on behalf of the lender, and it's done by a third-party appraiser. And he or she's going out there to inspect the property, and they're really looking for the value. So they're going to compare it to other homes that have sold recently in the area, hopefully, and then let the lender know what they feel their opinion of value is. And remember, they're a person, so take it with a grain of salt.
It's just one person's opinion of value.
Sometimes one appraiser may see one value and the other sees a different one. So it's, they're human, and that's the case. But ultimately, it's a document for the lender to kind of protect them, to know the condition of the property, but more importantly, what the value is. Is it a good investment for that lender, and does it meet the requirements of the loan?
So on the AAR contract, you're actually secured by an appraisal contingency. What that means is if the house doesn't appraise what we're under contract for, then it's my job to negotiate that price down to whatever the appraised value is. If it appraises for more than what we're under contract, same is true, they don't raise the price on you. You get the house for what we're under contract for, or less. So if the seller doesn't reduce the price to the appraised value, then you have the ability to cancel and get your earnest money back. There's a lot of outs in the AAR contract. It's 90% protects the buyer on the sale. So it's a very good state to buy a house in.
Yeah.
After the appraisal, then what happens?
So yeah, once you're under contract, just to backtrack, just a touch, like when Joe's ordering the home inspection, you guys are negotiating, we're also disclosing the loan. We may be updating some income and asset documents for the loan processor, and what they're doing is they're getting everything ready for the underwriter. They're going to order verifications of employment, deposits, things that need to be in the file for the underwriter to review. And then ultimately when the appraisal comes back, you don't have to wait for the appraisal to go to underwriting. If we're all ready for underwriting, we'll submit it to get our approval in place before the appraisal comes in, just to keep things moving. But then once the underwriter approves the loan, a lot of times you'll be fully approved and good to go. Sometimes they'll ask for a few more items from the client, from the buyer, to resubmit for final approval, and then at that point we send the loan documents to the title company.
Right. And so from start to finish, from contract to close, these guys can get it done in 21 days if you do most of the legwork up front. And why that's important in a competitive market like we are in today, if 3 offers come across the table to a seller and 2 are the normal 30 to 45 day close, and then your offer comes through and it's 21 day close, chances are they're going to go with your offer if everything else is the same. So you'll win more contracts, you'll actually get the house of your dreams, and that's if you do all the legwork up front. So if you're 3 to 6 months out from buying a house, get started now. It'll save you a ton of money, plus you'll get the house that you want because you're going to win more contracts.
Luck favors the prepared, right?
Right,
so if you're prepared, good things will happen.
Yeah. So once it's fully approved, then title will call you to set up a signing. Once you sign, a lot of people think that the last signature, they push over the keys and then the house is yours, but that's not really how it goes down.
Yeah. So typically it'll fund and record the next day or the following day. It all depends on when your actual close of escrow date is. But the title company, their job is to balance with the lender, so they're balancing with our loan funder, and they're making sure they got all the numbers right, and then we wire them our money, and then the title company records your title with the county that you're closing in. From a lending standpoint, it's important to make sure that you keep your job. Don't put in your 2-week notice. We're going to verify employment the day we fund. So that's an important thing, and don't mess with your credit. Yeah,
don't go buy a car in the middle of a transaction. I've had that happen before.
Right,
don't go apply for a Kohl's card to save $5 on a $20 purchase. That can affect your credit negatively. You don't want to open up any new credit lines for appliances or furniture until we're totally done with the process.
Once you have the keys in your hand.
That's right. Yeah. So
do what you want.
People can sign weeks ahead of time before they actually close.
Correct.
So, we got to wait for it to actually record with the county before we can hand over the keys.
Right.
But from start to finish, get all the legwork done now. That way, from start to finish, it can be 20 to 30 days out from the time of contract. If you do it all up front, it will be a seamless transaction. You want to go with a mortgage broker instead of a big bank like Wells Fargo or Bank of America or Chase. And the reason is this: if I'm selling a house, I'm the listing agent, and I see 3 pre-quals come over. One's from Chase, one's from Wells Fargo, and then one's from a mortgage bank like AmeriFirst. I'm going with the mortgage banker because that's all they do. So they only write mortgage loans. The Chase, Wells Fargo, Bank of America, they do a lot of other things, and they're just, those pre-quals aren't really taken seriously. So
much bigger, a lot of more people involved in the transaction. You may not work with the same person all the way through, and can create confusion. Things get missed.
And that's one of the only ways that I've seen people lose earnest money is if the lender can't close on time. Then the seller can actually cancel on you and take your earnest money. So it's very important that you're using a reputable mortgage company that isn't going to mess up your loan and can close on time. It's very important. So if you guys have any other questions, let us know in the comments section. We'll be happy to answer those for you. If you liked this video, don't forget to comment, share, and like it. And glad you watched, and we'll talk to you later.